Hi everyone, I'm happy to see you here. As you probably know, I'm Chris, and this is my Mercado Libre presentation. I hope you enjoy it, um, and yeah, I'm looking forward to it. So, how many of you are following the FIFA World Cup? If you do, you probably know that Brazil is already out, Mexico is already out, and right now Argentina is still in the cup. Um, and those three countries are the biggest markets that Mercado Libre serves. So in that order. So first Brazil, then Mexico, then Argentina. All right, some numbers here. One, 49%, and number one. Mercado Libre is the only company in the world out of 83,000 listed companies, the only one that has grown its revenue over 30% in every single quarter in the last 28 quarters. I think that's pretty impressive. 80, 20, 28 quarters in a row. That means 7 years. Um, Pretty impressive, right? So the 49%, that's the revenue growth in the last quarter, but the market still didn't like it. And number one, this is not theory. This is my largest position in my portfolio. So I know this company very well. I have had it in my portfolio for years, and I'm very comfortable with it being my number one position. The company in short. So I'll show you three engines. The first one is e-commerce, and it is a marketplace. So the model actually started with a third party, 3P, and that means that, you know, people living in Latin America can create their own shop on Mercado Libre and start selling there. Recently, about 2 years ago, not even 2 years ago, they started with 1P or um, first party markets. And that means that the company itself buys things that it's then sells to its customers. So it's a different model. It's the model that Amazon started with. Mercado Libre started with 3P, and in the last few years, it also added 1P. We will see later why they did that. The second engine, Mercado Pago. So this is the fintech side of Mercado Libre. So think about payments, credit, digital wallet, etc. Third engine, advertising, ads. So that means high margins, fast growing um, ad platform that adds to the bottom line. The Q1 2020 results, 8.85 billion in revenue. That was up 49% year over year, and that beat the consensus by 530 million. That's a lot. 6.3% beat, 6.3% beat on revenue is a lot for any company, but especially for a company already at this size and widely followed by, you know, a few dozen analysts. So impressive results. This is the full ecosystem. So you have 1P, which I just explained, which is pretty recent. Then you have ads, um, the marketplace, of course. You have shipping, so they have their own distribution network. You have shops, which is a bit comparable to Shopify, so you can personalize your shop there, but it's very small. You have online payments, and that means outside of Mercado Pago's or Mercado Libre's own platforms. So, if you go to another e-commerce player, you're often able to pay with your Mercado Pago account. You can also pay in physical stores, so brick and mortar stores. Um, Often that's with a QR code, but not always. Um, and then, of course, the core Mercado Pago services like the digital account, banking account, um, credit, both credit cards and loans, asset management. So they have funds which are very, safe, that you can invest in. So safe, mostly government bonds and other high grade bonds. There's a little bit of crypto and there's a little bit of insurtech, so insurance, but that's with partners. The share price dropped quite a bit from the high. It's down about 36%. Yeah, 36%. Um, and as Americans often do nowadays, they go to court and they sue the company of which the stock is down. So this is a case, the market versus Mercado Libre. The first accusation the market has: dramatically lower margins, low profitability, and negative free cash flow. And you see the numbers, and you can only say this is true, right? Um, because margins went down from 12.9%, so that's operating margins, to 6.9%. And net income went down dramatically as well to 4.7%. The defense. Let me defend Mercado Libre here. First, it's a Latin American company, and it knows that many investors have a bias against Latin American companies, but because they are seen as a lower quality, and that's why Mercado Libre has outstanding um, earnings releases with lots and lots and lots of details, so you can follow everything very well. Okay, the defense goes: lower margins are only a problem if they are caused by competition or a fundamental problem, not if it is the intention. Now, I told you that they are very open and candid in their communication. Well, you can see that here. So they take the margins of last year and they adjust them and show them for this year. So there are 3 down and there are 2 up. Um, let's have a look in more detail. So first exhibit in the defense, the cost of goods sold. So 3 percentage points impact to margins because of free shipping. So Mercado Libre lowered its free shipping threshold dramatically, a lot. And yeah, it means that you don't have to make a big purchase to have free shipping, right? And of course, that impacts margins. But look at the items sold in Brazil. So they introduced this last year. Q2 2025, 26% growth in items sold. Q3, 42% more items sold. Q4, 45% more items sold. And the most recent quarter, Q1, 56% items more sold, which is pretty impressive. So this is accelerating, actually. Second accusation: more sales and marketing costs. So you can see that here. It has a 1 percentage point impact on the margins. Now, let me defend them as well. They have been investing in marketing, and I think it's genius. And I'm not alone there. They got quite a few prizes for their marketing campaigns. It's in online with AI. It's harder to show that, but especially in out of home marketing, think of billboards and such. It's pretty clear, and I'll show you two examples. So the first one is AI billboards. So here you see two people jogging, and the billboard automatically shows running shoes with a QR code for a discount. Um, so those billboards, those AI billboards, know the time of day, the place they are at, the temperature, um, all those kinds of things, and it can also see what the people are doing. So if like half a minute later somebody is there walking a dog, maybe they will see an ad for dog food or something. So I think this is pretty impressive, and they are pioneers in this. Second one are the boxed ads. So this is with Nike. As you can see, Nike has its ad for its shoes, and it is as if Mercado Libre has boxed those ads. So the board around the billboard is a Mercado Libre package, as it were, and it's a win-win-win. Why? It's a win for Nike because they only pay 70% of their normal cost for the ad. Mercado Libre pays 50%, so cheap ads actually. And the billboard owner, if you can count, gets 120%. So it's a win-win-win, and I love that. Third accusation, the lower NIMAL or net interest margin after losses. And again, yes, it's true. You can see that it was very high. It's still quite high actually, but 17.8% means a big drop. Now, defense exhibit 3, the NIMAL compression is not caused by credit quality. That's extremely important to know. Where does it come from? Two things. Um, First, you have to know that the credit book grew 87% year over year. That's the fastest growth ever. And the 3.3 percentage points compression has two reasons. The first one is 2.6% percentage point comes from day one provisioning. What that means is this is an accounting rule. So if you give someone a loan, you have to write down the loss of that loan that you expect completely on day one without getting any of the interest income you get. I think if you can see that if you know a loan book grows by 87%, that this has a big impact, right? Because you got to take the losses from day one without any gains. The second one was a deliberate expansion. So in Brazil, Mercado Libre extended the maximum loan period from 5 months to 8 months. So that also gives impact because it takes longer before you um, can put the loan in your books. So um, quite a bit of impact, and Mercado Libre is so open that it writes bad debt because they know that people call it bad debt. But at the same time, it might give you the wrong expression, the wrong impression, because it's not really bad debt. It's just the consequence of the accounting rules and of an extension of the loans. Um, the net interest margin after losses, and the after losses is important. So it's still very high. So if you compare it to Itaú, which is the biggest bank in Brazil, that has a NIMAL of 6% versus 17.8, right? Now, Itaú and other big banks in Brazil, and there are 5 big banks, are seen as only for the rich. And they have more secured loans. The advantage of secured loans is that they are secured, which means you can grab something if someone doesn't pay back the loan. The disadvantage is that it is secured, and that means that the interest margin will be lower. Okay, the track record. Every time Mercado Libre has invested for the long term, it paid off. So it's not the first time that they lowered the free shipping threshold. They did that in the past, and analysts were negative about it. And you heard the same things in the past. Oh, this is because of competition. Then it was Amazon. Now it is Shopee. That's what you hear. That's what analysts say. But it was extremely successful the last time, and I see no reason why that would not be the case this time. The logistics network was another one. So Mercado Libre didn't have its own logistics network. Now 95% of its packages go through its network at some time. And is it 63, 65% never leaves its network actually. So, and it's even a bigger advantage to have a logistics network than in the US, because Amazon is of course the example everyone will think of. And yeah, it's a good example. But it's even a bigger advantage in Brazil, because the competitors are usually a little bit lower quality than in the US, although it's pretty good. It's not like, awful. But there are some distant areas where it's harder to reach people, where Mercado Libre has a pretty good network and better than the incumbents, the shipping incumbents. So yeah, it's even a bigger advantage than in the US. Don't forget, Amazon reinvested consistently. eBay kept its big margins. So I prefer a company reinvesting its money for the long term. Maybe you know Nick Sleep. Um, he got a very successful investing career, um, with almost 20% growth per year for his portfolio over 13 years. And his only principle was scale economics shared. And what that means is that if you get bigger, you get scale advantages. So you profit from the fact that you're bigger. Now, the best companies, instead of taking the margins directly, reinvest a lot of that money for their customers. For example, lower free shipping thresholds. That's why Nick Sleep actually had a portfolio of just 3 stocks for a very long time. Amazon, he invested in 2003, Costco, and Berkshire Hathaway. And with that portfolio, he beat the index by a wide margin. So share economies, scale economies shared is a principle that you definitely can apply to Mercado Libre. Not just now, but in the past as well. All right, so the verdict, the market versus Mercado Libre, since I am the judge, is not guilty. Lower margins and lower NIMAL, net interest margin after the losses, they are down by design, not by worsening fundamentals. All right, how about the valuation? Is the stock attractive right now? I have a valuation framework. If you have been following me for a while, you know it. This is it. It's based on the work of Professor Damodaran, the Dean of Valuation. But I changed it a little bit. So he has those six stages of companies: startup, young growth, high growth, mature growth, maturity, and then decline. And actually, you should look at the stage the company is in to know which valuation method you should use. Now, I like investing in high growth. And with 49% revenue growth, I don't think I have to argue that I think Mercado Libre is still in high growth. So that means gross EV to gross profit, right? Let's look at that valuation. As you can see, it's low. It's 6.6, I think. It's a bit tiny on my screen because it's a bit smaller. I have some things around it. Um, but that means that it is the lowest valuation in 15 years. So 2011, I think, was the last time that the stock traded at this low EV to gross profit ratio. Now, some prefer free cash flow. It's not a good one. I still share it because it shows the same thing, that it's extremely um, cheap, but with a fintech company, which Mercado Libre is as well. Um, Not just fintech, any financial company, free cash flow is not the best metric to use. So EV gross profit is much better. So why buy Mercado Libre? 7 reasons. First one, it's a fair to great price for a great company. Now, that doesn't mean I think it's a great price right now. That doesn't mean that the stock will jump in a few months or so. But it does mean that if you hold the stock, if you buy now and you hold the stock for, you know, quite a while, I think you will do great. Um, it's extremely hard to time the market, because if the market as a whole comes down, Mercado Libre stock could go down further. That's always possible. But then you can buy at an even cheaper price, right? So that's why I never invest everything at one moment. I invest over time. And if I see a stock that's really cheap, I buy a bit more. And even though Mercado Libre is already my biggest position, I'm not afraid to add. So 36% uh, drawdown on short-term sentiment. I call it sentiment because it's an investment for the long term, and companies that do that outperform over the long term, not over the short term. And it's the cheapest valuation in over a decade, so it's 15 years even. So for short-term reasons again, because we will see a few metrics later in this presentation that show you that the investments are, we have already seen the 56% more items sold in Brazil, right? But there are other metrics that can show you that it is already paying off. So the investments work. It's the most unique growth story on earth. Only company out of 83,000 with 30% revenue growth in each and every single quarter for 28 quarters in a row and counting. 49% revenue growth in the last quarter, fastest since the COVID era. The KPIs, the key performance indicators, are accelerating because of the investments. So 56% more items sold, 87% growth in the credit portfolio, 77% growth in the assets under management, and 73% in the advertising. Um, and that is a very high margin. So a very high margin business. So pretty good, right? Um, Fourth reason, the moat is deepening. So 95.5% of all the deliveries are already on Mercados Libre's network, and shipping costs are down 17% year over year. So you see here that um, the economies of scale definitely work. 70% drop in um, the delivery of packages is very substantial, right? And this is why Mercado Libre has beaten Amazon in Brazil since Amazon entered Brazil in 2012. So Amazon is the second biggest player in Latin America. Um, in Brazil, Mercado Libre has about 28% market share. Amazon has about 12, 13. Then you have Shopee, which is part of Sea Limited, with about 9% market share, and all the rest is small. There are quite a few others, like local players like Magalu and such. There's Temu, there is AliExpress, but they are all very small, like 2-3%, and you know I don't think that they are a threat. And as I said, like 28% versus 12, 13% for Amazon, that's a big lead for Mercado Libre in the biggest Latin American market. The payoff is already showing. The fifth reason, this is what I refer to. So 50% of the free shipping hit has already been recovered in Brazil. So they introduced this last year. 50% of the hit that they took because of the very or the lower um, threshold for free shipping has already been recovered. So that's really impressive. Usually it's like 3, 4, 5 years before 50% is recovered. So Mercado Libre did it in a year. Um, so product development costs dropped from 9.3% to 7.9% because of AI. So if you worry about AI, don't worry. I'll come back to this as well. Mercado Libre is very, very well positioned to profit from AI. So it uses AI a lot and it really works. 2 years ago, less than 2 years ago, actually, they started the first party selling. So meaning they buy goods that they want to sell and then sell them on the platform. Why did they do that? To encourage more competition. So they saw that in certain categories, prices were too high because there was not enough competition. And one of those elements or one of those areas that they invested in or started selling themselves is smartphones. So smartphones, they jumped from 12% market share to 36% market share. I was a bit too fast with my presentation here, but in less than 2 years, from 12% to 36% is pretty impressive, right? For such a big market as smartphones. Sixth reason, there's still a lot of optionality. So $20 billion are in deposits, which are still idle in Mexico. Mercado Libre cannot use those deposits for the loans that they give. So they have to use their free cash flow for the loans. So that's a big distortion, meaning that if you look at free cash flow, it's slightly negative, but that is because Mercado Libre uses that free cash flow for the loans. There is a banking license pending in Mexico. once they have that banking license, they can use those accounts, that 20 billion in deposits. They can use that for loans, and they don't have to use their free cash flow anymore. So you should expect free cash flow to, really explode. How long will this take? No idea. I mean, regulatory um, organizations are not always known for being extremely fast. So this can take a year. Who knows? Maybe two. I don't think so. But it is coming. So it's important to know that. Ads are just 2% of GMV right now. GMV is the gross merchandise volume. So that's the total amount of all goods sold on the platform. So if Mercado Libre sells, a $5 pen, it's not the margin on that pen, it's the $5 that is GMV. So ads are now 2% of GMV. If you compare that to Amazon, that's 8%. So that shows that in theory, and probably in reality as well, Mercado Libre can quadruple the ad revenue as a percentage of GMV. And as you know, I have already said this a few times, ads have very high margins. And there are other things as well. Melimas, which we would pronounce as Meli Plus. So that's actually like Amazon Prime. They only started that, I think, a year and a half ago, maybe two. It includes streaming and includes all the other advantages that you probably know from Amazon Prime. And you see the same things that people who have it order more things. Their shopping cart checkouts are a lot higher, higher amounts of buying, etc. So they partner with insurance companies as well to sell insurance. It's still very small, but it's growing extremely fast. Remittances, so sending money abroad, quite important in Latin America. And they are ready for agentic shopping. So AI agents that will shop for us in the future. I think everyone agrees that that's a there's a big probability that will happen. I will use it right away if I could. Like, you know me, shop for me. I want this, and then it searches like 1,000 websites, right? Now, Mercado Libre is absolutely ready for this. It has already streamlined all its marketplace shops, or whatever you want to call them, for agentic shopping. So it's still extremely early. I don't think anyone listening to this already uses agents for shopping, but they are definitely ready and encouraging it. So once people will start adopting this, I think that it could be a big boost to Mercado Libre again. While the local Magalus and such will have a hard time implementing this. Um, the opportunities are still enormous. Latin America is still in the early innings of digital adoption. So it only has 50% of the penetration of e-commerce compared to the US, and only 38.5% compared to China. And they only reach 25% of the bankable population so far. Look, I will probably put my head on the chopping board here, but I'm going to say it anyway. I think that Mercado Libre has the potential to become the first Latin American company to reach a $1 trillion market cap. So right now that's 85%. Like Amazon was in 2011. Amazon reached that huge number in 2018. So I will not, I don't want to imply that Mercado Libre will only need 7 years to go from 85 billion to 1 trillion. But I think it has a real chance to do that within 10 years, 12 years. As long as the company keeps performing and executing as it has, I think, there is that potential. Let's put it that way. All right, Q&A. If you have questions and you're a paid member, you can ask questions in the comments below. Yeah, make sure to follow me on potentialmultibaggers.com and add from value. And I hope you enjoyed this presentation and you learned something. Have a great day. Bye.